Hi, this is Candice Paine for Biz News. I'm sitting with Paul Semple, who is a portfolio manager with Futuregrowth Asset Management. This special podcast is brought to you by Futuregrowth, and today we're talking about a very interesting deal that Futuregrowth has embarked on, where they are funding housing investment partners to provide low-cost housing to people who ordinarily would be excluded from that market. Paul, do you want to tell us a little bit more about the deal?
Yeah, thanks, Candice. Futuregrowth looked at this deal for a number of months before we decided to invest. This is a really new business. When I say new, it's in its third year now. When we started looking at it, it was just about a year old. And we immediately saw the potential for this business to grow and to fill a very real need in the market. And that is to address the affordability constraints that the low to mid-income earner has when they are buying a house for the first time.
What would you include in that lower to mid-income range? What sort of household income are we looking at?
So we're specifically looking at an income of between 8,000 and 15,000 Rand per month. The traditional banking market would really cut off their loan applications at around 12,000 Rand per month.
So this can tend to be quite high risk if that's household income. What are the qualifying criteria for somebody who has that sort of household income wanting to purchase a home through this scheme?
Yeah, it's a really well-structured credit assessment process that Housing Investment Partners follows. I think probably the first criteria is the applicant must be full-time employed, and they must have been employed for a period of time before their application is submitted. Second criteria is the home loan repayment should not be more than 30% of their income. Now, the benefit of this type of loan is that although it starts at 30%, the installment starts at 30% of the monthly income, it increases annually. The installment increases annually in line with the salary increase that the borrower receives from his employer.
Okay, so that's different to normal home loans where it increases with the prime rate.
Absolutely. So it provides a lower starting or entry level for a first-time buyer in terms of being able to afford a home loan. And secondly, it gives a borrower the certainty that their installments won't fluctuate when the prime rate changes. So it gives them a long-term outlook on their affordability for that loan.
And what would be the term of one of these loans?
The term is exactly the same as the traditional mortgage of 20 years.
Okay.
The only difference, as I say, is that the installment increases annually as opposed to being flat, which would be the case in a traditional loan.
And would these be 100% loans?
Up to 98% would be financed with debt, Candice. The borrower would need to provide that 2%. The business is targeting a lot of mining companies which provide subsidized packages to their employees and provide that 2% or so of equity upfront as a kind of a grant to their employees.
And what are the sort of house prices that we are looking at for people that fall into this bracket?
Yeah, so the typical house range would be between 300,000 and 400,000 Rand value.
And do we have enough of that housing available in the country?
No, that's the biggest challenge in this market. First of all, there's huge demand for housing, number one. Number two is there's not enough housing stock coming into the market. Just a statistic is that there's over 200,000 home buyers out there in this market, in this low to affordable income market. Sure. But there's only 25,000 units being delivered per annum. And most of those units are unable to be financed by the traditional bank.
Okay, so this is really the gap that they are trying to fill. What is the relationship between the National Housing Finance Corp and Old Mutual in this deal?
They are both the shareholders of this business, and they established the business, and it was their concept and their vision.
Paul, how much funding is there available for this scheme from Futuregrowth?
Futuregrowth has agreed to a 650 million debt line to the business, and that comprises 52% of the total funding package for the business. The shareholders provide the other 48% of the funding.
Okay, so it's quite large. And are the underlying participants, do they need to take out the normal sort of home insurance and life insurance and those kind of things as well?
Yes, that's a critical part of the loan scheme. The home loan borrowers need to take that out. Old Mutual provides that. The borrowers are not forced to take an Old Mutual product, but that is offered to them as life cover, and there's also retrenchment cover available too.
And Futuregrowth has a strong development angle to the types of opportunities that they invest in. Is it the same with this kind of deal?
Yes, absolutely. This fits squarely into our developmental mandate, and many of our funds have that aspect in their mandate and investment requirements. So it's great for that.
And do you see this promoting prosperity in the country?
Absolutely. We see home ownership as a significant driver of prosperity in this country, and it fulfills a very important role in addressing the socioeconomic challenges that we have in South Africa.
And then just finally, Paul, there's obviously a value chain in providing the rollout of the homes that are needed within the South African context. Is that something that Futuregrowth looks at too?
Yes, Candice, Futuregrowth is busy looking at a number of investments in actual housing development, so funding the actual developers of these houses, which is great because then we can see the full value chain from the raw land right through to the ultimate home that's built and financed through a business like Housing Investment Partners.
And you'd also have a very huge impact on the scheme working if you're involved across the value chain.
Absolutely, yes. We believe that we're providing money towards really high impact on the ground investment, which will make a difference in many people's lives.
Paul, thank you for your time today. It's really encouraging the work that Futuregrowth Asset Management is doing in the development and upliftment of the country, and more schemes like this I'm sure will go a long way to making our country a better place to be in.
Thank you, Candice.